Bitcoin has been incredibly volatile lately. In the last 7 days, it went up over 40%. And there are some interesting reasons behind it. Let me tell you what happened. It all started when Silicon Valley Bank collapsed on the 9th of March, Thursday. On Friday, Yellen said nothing about making customers whole, so during the weekend there was a lot of panic about what was going to happen. One of the customers of Silicon Valley Bank was Circle, the issuer of second biggest stablecoin, USDC. Turns out Circle was holding about 10% of its reserves in Silicon Valley Bank, and it was unable to withdraw. When the market found this out, USDC broke its peg and went down about 10% in price, so you could buy 1 USDC at the price of 90 cents. The market was panicked. On Sunday, Yellen announced that Silicon Valley Bank would be bailed out. In doing so, they changed the market dynamics drastically. Here's what happened after. On Monday, Binance CEO CZ tweeted out that they would be turning $1 billion worth of BUSD into native crypto like Ethereum and Bitcoin. He tweeted that under the name of transparency, but it was clear market manipulation. People saw that as an opportunity to front-run that trade. As that $1 billion would be turned into BTC and Ethereum, alongside the buy pressure coming from Binance and frontrunners of that trade, Bitcoin went up from $22,000 to $26,000. As much as I appreciate the price going up, it was clear market manipulation by CZ. Also, I don't like the fact how Binance decided to ditch their own stablecoin BUSD after USDC went under some spotlight. It did help price go up in the short term, but these may come back later on to bite us in the end. While all this panic was going on in the markets, people went back to remember their PTSD from 2008 banking crisis. Satoshi Nakamoto had published Bitcoin in 2009, right after that banking crisis, as a response. And he also hid a message in the first ever block of Bitcoin. The message read, "Chancellor in the brink of second bailout for banks." So Bitcoin was founded as an answer to the incompetence of banks. As banks collapsed, this narrative for Bitcoin as a store of value started to shine again. Now on to perhaps the most important point of them all. Fed has been hiking rates for the last year. After 10 years of easy monetary policy, rate hikes were coming in fast, and S&P, Nasdaq and crypto were not happy about it. But now, Fed announced a bailout plan, and this plan seems to give out free money to banks who are in need. And the scope of this bailout is so huge that QE might be back on the table. If you look at the market expectations for rates on Fed Watch tool, we can see that on the first week of March, the expectation of a 25 basis point hike was at a 70% and rapidly decreasing. On the 8th of March, the expectation of a 25 basis point hike was 20% and the market expected a 50 basis point hike at 80% probability. Then it all suddenly changed on the 9th of March, and if you look at it now, there is no expectation at all of a 50 basis point hike. Which means that the markets are pricing in easy monetary policies return, and this was why the risk assets went ballistic in the last week. On this Thursday, 22nd of March, we'll see how Fed will respond to this crisis. But it's safe to say that this last week, Bitcoin went up because of its banks are bad and Bitcoin is good narrative, as well as QE being back on the table. Subscribe if you like this type of market update videos, and I'll see you in the next one.